All right, what's going on, Tycoon? Super excited for today's video. We're going to look at /ES. Okay, this is the S&P 500 futures, and we're going to give an update on the VIX. Okay, the volatility index, aka the fear index, which has been rising and spiking dramatically, causing the market to drop. Okay, so starting off, we're going to look at the weekly volume profile. Okay, what this does, all right, this is our volume profile here, and it gives us high volume nodes and high volume nodes and low volume nodes. Okay, these low volume areas are what I like to call volume gaps, and this is where price action is going to move very quickly through these levels. All right, so that's why I have those charted up here. You can see that we're still respecting the same bearish channel that I've been had in pretty much all of these /ES S&P 500 future videos. Okay, we got the nice rejection off the top here, nice rejection off the top here, got a nice bounce off the bottom here. All right, so we're zigzagging, okay, through this bearish channel until we have a breakout to the upside. All right, now again, let's look at these real quick, these high volume nodes. All right, look at how this area right here, right around 4,300, was our high volume node. Okay, and right above there, it goes a little bit lower. So what happens in the stock market is price action moves from high volume node to high volume node, right? So we were here at these levels previously, okay, right around 3,900, and we shot up past 4,200. Okay, what happened was we went from this high volume area, okay, to this high volume area. The volume profile is going to show you volume by price versus volume by time, which most people are familiar with. Once you understand volume by price, you can understand where the pivot points are in the market. This was clearly a pivot point. If we would have broken past here, okay, and gone to the upside, all right, we would have broken out of this bearish channel. All right, but that pivot point held, and we dropped lower, and we're pivoting to the downside. All right, so that's basically all I wanted to show on the futures real quick. We'll zoom in on this bearish channel just so it's a little bit clearer for you guys, and you can really see the market perspective. Okay, we're zigzagging in through this bearish channel, and until we have a breakout to the upside, all right, we're going to be respecting this pattern. All right, now that doesn't mean that the S&P 500 can't go here, bounce, and then break below. Okay, it most definitely can break this bearish channel, but for now, this is the main pattern that we are watching. Okay, we'll go and dive into the VIX now. All right, and we'll pull up our 1 hour chart. Okay, and actually, what I'm going to do is I'm going to start off by showing you guys, okay, the buying channels. Okay, this is how the market works. All right, it's algorithmic. Okay, whether you believe it or not, most institutions, most hedge fund money is really ran by algorithms. Okay, it's done by algos. So what we can see is we can see systematic buying and selling through these channels. Okay, so if you look here, all right, we have our structure. All right, so we have a buying channel here, we're shooting up, we're trading in this buying channel, we drop back down, come to this buying channel, and we progress up. Okay, so these are the channels that the market is currently in. Okay, upwards, 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 and this is the VIX, this is the fear index. So as you see the VIX go up, you can expect to see the SPY or /ES go down. All right, and that's currently what we've been experiencing in the market. Okay, I believe the last time I did a video on the VIX, okay, I was covering the bearish channel. All right, so we were bouncing, and we had a nice selling channel. Okay, we had nice structure for sellers, and we were seeing that we were clearly bouncing in between these areas, coming lower, all right, and bouncing through these areas in this original channel. Okay, in this original bearish structure we have. Now we have some bullish structure. Okay, and we're seeing algos come in, and they're buying right in between this channel. It's progressing higher, it breaks through this channel, okay, and comes down to here, find support along this channel. Okay, then what do we see? We see systematic buying. Okay, we come in, the structure's there, we come up, we come down, and we're bouncing. Okay, if we zoom in a little bit, all right, and we're going to throw our support and resistance levels on there now. Okay, because we actually have the structure, and we just took a look at the structure. We understand what the structure of the VIX is. Okay, so currently right now, the main thing that I would watch out for if you are looking on the VIX, okay, is we could have a very possible cup and handle forming. All right, if you look here, here's our cup, and this may be a handle forming currently in the making. All right. If this happens, what you can expect, okay, and what you would look for to draw, all right, is basically going to be a bearish channel right around here, okay? So look for the VIX to zigzag in between this area until we have a breakout to the upside. If we get that breakout to the upside, VIX most definitely can go past $28, okay? We have a resistance level here at 28.03 and 28.45, okay? So that's where I would look out for on the VIX if it continues to rise. All right. Now we may get rejected. All right. We have a nice support level here at 26.68 that we are currently holding. Right. We tried to wick below here. We tried to wick below here and we failed. Okay. Right now, this is actually the second most bullish candlestick there is. If you look at individual candlesticks, right, you have, bullish engulfing, you have dojis, you have all these different candles, right? This candle right here is currently the second most bullish single candle there is. All right, where you have this large wick down here, and then you see how we opened up here. All right, sellers tried to come in and push it down, but we were able to reverse, and now we're actually closing potentially higher than the actual open on this candlestick. All right, so the pain is not over yet. If you're wondering when to go long in the stock market, okay, and now is not the time. What you need to do is you need to wait, all right, for the peak fear. All right. I've covered these a lot in my videos, but these are the levels right here. Okay. 34, 31, really once VIX is above 30, right? We get past 30 and we can see 1, 2, 3, 4 times, 5 times, okay, where it's come up there past 30 and had a sharp, dramatic drop down. Okay. These pukes, okay, when the VIX pukes like this is the stock market rally. Okay, I mean, look at this big puke right here. All right, this was the SPY and the Nasdaq's huge rally over the past month or two, right? Is where we just saw a nice channel, okay, on the VIX, a nice selling channel. Okay, we just broke that structure as I went over earlier in the video, and we currently have a little bit of a buying channel. Okay, so we're going to see, are the algos going to systematically keep pushing the VIX higher until we get to these levels up here? And if we do get in these levels up here, these are when you want to go long in the stock market. Okay. It's not financial advice, but it's been the best strategy so far for the year of 2022, right? If you're able to buy call options or you're able to go long in the stock market when VIX is above 31, and you hold, right? You hold for a couple months, you hold for a month, you hold for, however long. All right, the VIX has been dropping down afterwards. All right. Now, the thing we have to be careful of is we may have not hit peak fear yet. Okay. This is the Fed meeting and rate hike fear. Okay. Each one of these spikes has been around CPI data, has been around a Fed meeting and a possible rate hike. Okay. That's when we've been experiencing the fear. So we have one coming up in September. So what VIX may do is VIX may go through the systematic algorithmic buying channel and progress upwards, okay, until we get to this 31, 34, or possibly even 38 level. All right. That is when you want to go long in the market again. And you want to get time on your side, right? If you're going long on the stock market at these levels, you're not going to look for immediate returns the next day, right? What you're going to do is you're going to set yourself up on a swing trade and you're going to look for, the stocks and the VIX, for stocks to go up and the VIX to drop. Okay. Now, in particular, this is mostly relevant to S&P 500 stocks. Okay. So, if you're looking to trade, small cap stocks or meme stocks based off the VIX, it's a little bit harder. Okay. The VIX is based off of S&P 500, option contracts, right? That's how it's measured. So, when people are buying more put options, right, and they're more bearish, the VIX is going to rise. When people are not buying put options on the VIX, okay, the VIX is going to fall down, right? Nobody's really hedging for a big move to the downside. But clearly, we can see that the VIX is rising and people are still anticipating a further drop in the market. All right. So appreciate you watching the video. Don't forget to like, comment, subscribe. I do viewer requests every single week. So if you want to see your stock, your specific ticker, cryptocurrency, anything like that in the next video, make sure to comment below.